I'm Cauble with Consolidated Planning, and I'm here today to give you my ideal framework for an open meeting. First, a couple of just ground rules. Always make sure that you're smiling and having fun with the client. If you're like most, this is your first real interaction in the office with the client. So make sure that they feel comfortable and they know how excited you are to tell them about the situation. First, I am a big start with the end in mind type of person. The end total of this meeting is to really collect data and maybe get as much data today as I can from the client. Other than that, it's not to tell them about insurance, what's right or wrong with their current strategy. It's to give them a good idea of, first, who we are, secondly, what separates us from others, and thirdly, what is it that we can really help them with. So first, let's talk about really who we are and what are some differences between us and maybe other financial advisors or financial institutions that they've dealt with. Well, first, I talk to the client, and I always say, if you're like most of my clients, I rarely, and I forget where I heard this, but I rarely use the term you or you to put the client on the defense. I always say, if you're like most of my other clients, since the time you were 16 years old, you've probably had 8 to 10 different financial relationships, from the time that you purchased your car, to the insurance person that insured the car, to the loan that you took out on the car, to buying a house, to someone that's helping you with taxes, to your first 401k, to the rollover to another company, to mortgage companies. All of these different financial relationships would answer questions that you would have about your financial situation very differently. What our goal is here at Consolidated Planning is to put all of that together, that entire financial picture together, and really be the quarterback for you and your team in these decision makings. What separates us and really what's the ultimate goal of this? Well, we quite simply ask the client, what is it that you want? And that's as simple as your wish list. If we were to look back on this meeting 5 years from today, 10 years from today, what are some things, both personally and professionally, that you would like to accomplish for us to be a success? On the other side of that, what are the dangers that you want to avoid within this plan that maybe keeps you up at night, or that you have questions if you're doing the right thing? That's really what drives our process, and we put everything together and accomplish those goals. Secondly, how do we do this? How do we get organized? The living balance sheet really is the fundamental tool that we're going to use this for. I take the clients through a brief explanation of this and hopefully show them how easy this is going to be to use, but also the real benefits of putting everything together. Our conversation starts really with the middle of the living balance sheet. And that's to say, you've probably seen this if you've ever done any type of financial planning. It's a basic balance sheet. What do you have and what do you owe? And ultimately, we come to a net worth number. Now, most planners will tell you this net worth number, this is really where your hopes and dreams are. This is where everything that you're trying to accomplish lays. And I'll agree with that. But I think you have to get there first. You really, if you were to imagine retirement planning and then living in retirement as a mountain, most financial planning stops when you get to the top of the mountain. I want to get you through your entire life. By doing that, we have to add 2 other phases to financial planning. First, I want you to imagine that this is a house. And if this was the house, the roof on the house, this is really the most important thing. All the wonderful things that we have inside have to be protected by this roof. We take them through things such as property and casualty, disability and health insurance, legal documents, and life insurance. Now, the answers to what's the right amount of protection, it really comes through with your wish list and what it is that you're trying to accomplish. Ultimately, we want to have all of these buckets as full as possible, but sometimes we know that's not reality, and we have to focus on the foundation of the house, which is cash flow. Income, what part of your income or cash flow goes to protection, what builds assets, and then what pays down liabilities. We also have to factor in your net income. You've got to have fun inside this plan as always. We try to get most of our clients to between a 15 and 20% savings rate in order to accomplish these goals. I also like to show them how easy it is to really coordinate these. Any investment accounts, we'll link these through the living balance sheet so that this shows up on a daily basis so we know exactly where you stand, and we can use this tool to model out and to make any adjustments as things come up. I do tell the clients though, when we meet, it's rarely going to be about investment performance or insurance policies or anything like that. It's going to be asking them, how close are your kids getting to college? How close are you getting to retirement? what's changed on this wish list. We'll go back and we'll solve for this information later, but for the most part, we're going to plan for the worst case scenario. Really the last part of this, and the thing that I want them to take away from, is how do we look at financial planning maybe differently than any other advisor that they've dealt with. The best tool that I like to use for this is wealth building potential. I think the importance of this calculator really is to be as accurate as possible and to really get some feedback. So we probably spend more time on this than most advisors do, but I think it's a very, very important calculator, and the buy-in from the client to make sure we're as accurate as possible, I think is extremely important. So for the sake of time, I'll say this client has a 20-year period of time until retirement, current income of $100,000. I want a big buy-in on this annual rate, on this annual increase. To make the math work, you want the client to really believe that this is going to be between at least 2 and 3%, if not more. Take them back and ask them questions about 5 years ago, what was their salary compared to today? 10 years ago, if we're having trouble with that. But I really want them to believe that this is going to be an honest assessment of where their income is going to go. I also want them to say, in an imaginary world, if you didn't have to pay taxes, didn't have any liabilities, and I was going to write a check for all the lifestyle expenditures, and we could take this money and put it in the market, what's a reasonable after-tax rate of return we could have over that 20-year period of time? Most clients are going to give you somewhere between 5, 6, and 7. That's really ideal. If they throw 10% out there, you can use it, but we really want to be more realistic. So ask them why they think 10. Did they invest with Madoff? Is it something along those lines? So once we get this narrowed in to a reasonable rate of return, around 6%, let's take a look. And I think this is a very important step and something to take some time on. This client, with 20 years left to retirement, income of $100,000, increasing by 3%, with a after-tax rate of return of 6%, is able to have close to $5 million in this account, or that's flowing through basically their checkbook over this entire 20-year period of time. That's an amazing amount of money, and we want to take it a step further and show you exactly how we would use that money and deploy it. Well, first, let's take out some of the imaginary steps here. And if you're like most people, you're paying about 1/3 of what you make in taxes. And that's not just income tax, but it's when you go to the movies, you pay a tax. When you buy your car. If you're like most of our clients, you have another 30% in debt. If you're like most clients, you take another 30% and spend it on lifestyle. And very quickly, we've turned that almost $5 million into where most people fit into retirement, about $500,000. This is pretty interesting to me, and I want to again take a pause here, because I sort of view this like, if this is a water line and the Titanic's cruising along here, it's not what was above the iceberg that really sunk it. It was what was below the surface that really comes into there. Taxes, debt, and lifestyle eats away at so much of these dollars that come in. Traditional financial planners, if you've been there, attack this very simply. They take one look at this after-tax rate of return, and they very easily position that to 7%, 8%, and they come up with a figure that's a lot more. Here, just with a click of a button, we've made the client $50,000. To us, that's the most risky part of retirement. We want to attack this a completely different way. Instead of rate of return, we want to completely take rate of return out of the picture. Let's make our strategy, let's make our particular plan work without any of this. And let's really focus on the structure. What I mean by that is, let's take a look at taxes, both pre and post-retirement. Let's make a slight change in taxes. Let's take a look at debt and how you're paying debt, and what part of your plan does debt come in there. And you know what? I'm going to keep lifestyle the same. That's a decision we're going to let the client make. But in this illustration, I want to just show that with small tweaks to these couple of areas and a 0% rate of return, we're right back where we started at $483,000. That structure is so important to the plan, and then we can take a look at rate of return. where that's not the focus of the plan, but it's secondary because we're so structurally in tune. Taxes, debt, and lifestyle, I can calculate that over a 20-year period of time. Investment performance, I really can't. So we try not to make that a focal point. At this point, I hope the client really focuses on three important things. That is, what it is that we do, what it is that separates us from others, and how we'll take all of their information and their data and everything they've worked so hard for and put it into a plan that works under the worst case scenario. This is generally the point when we ask them, we'd love to know a little bit of feedback on this. Does it feel like it's in the right place? We want to ask them about wish list at this point. What is it that drives them? What is it that's important to them? And is there anything that keeps them up at night? Next time we get together with the client, we want to have this populated, and we need it as concise as possible to make sure that we know where everything is. And we also want them to talk when they leave here tonight about wish list. Is there something else they would add to that list? At this point, I think they have a great idea of who we are, what it is that we can help them with, and what separates us from others. Thanks for your time.